Welcome back to another YouTube video. Today's Sunday. Market already opened at 6:30 p.m. EST. So I'm gonna do a market, just short market overview on what I'm personally expecting. And I'll share, like I do every week, I'll share my ideas inside of the Discord. So if you guys haven't joined the Discord yet, it's free. Um, Link is in the description. Excuse me. So what I'll do is I will show you guys, I'll openly show you guys, the overview, like I said, and then I'm also going to show you guys my trade Zella. And as of right now, I'm not focused on the dollar. I've shifted like my mind from focusing on like the dollar amounts. And if you guys watched the last video, you'll see that I switched from looking at the dollar amount to now viewing this from a percentage standpoint. Um, I just think that it's more helpful psychologically. It's more easier to comprehend risk management, which is the most important thing right now. Um, Not just right now, but overall risk management when it comes to being a profitable trader. Um, Having a a good understanding and comprehension of your risk management is the top priority. Strategy is important, of course. What else is important? Volatility is important, but that's really out of our control as a retail trader. So it's not on the prioritized list, but if you have an idea of the volatility of the market that you're trading, such as like gold, NASDAQ, US 30, um, maybe GBP pairs or GBP JPY, GU, Euro USD, those volatile pairs, or USD JPY, those volatile pairs. When you understand that the specific market you're trading in has a good amount of participants in the market, that's you know um priority. It's good to know that, but the what makes you profitable is sticking to your trading plan, which is having a good foundation of your trading strategy, and also understanding or comprehending your level of risk management or your level of risk tolerance, because there's people who are risking 10-15% per trade and do very well and are up there with success. But you could be someone like myself who isn't willing to participate in or offer 10%, 15% risk to the market for 100% gain, or something like that. Even though the risk to reward might make sense, 10% for 100% gain or 10% for 40% of your account. I mean, if you have, I guess depending on your win rate, that would let you know whether it makes sense to risk that much or not. Because if you're risking 10% of your account's equity and you lose five times, then your reward could have been, if it's a 1 to 3, your reward could have been 30%, or 1 to 4, 40%. But if you have a low win rate, then your account's equity would go down very quickly. So instead of, you'll be pretty much risking 10% for, but it's pretty self-explanatory why people are going for, at most 5% or maybe at most 7%. So what I'll do is I've switched now from reading The Disciplined Trader by Mark Douglas to now reading Jack Schwager, who's interviewed top traders, and he's included his conversations, the type of questions that he's asked people, successful traders, um, like Paul Tudor Jones, Richard Dennis, Bruce Kovner, Michael Marcus. He's interviewed a good amount of, top traders in this book called Market Wizards. So I've actively been reading this book for probably been over a week, and I'm probably a quarter into the book. So I've got about 3/4 left out of the book. It's actually been an amazing he's had amazing interviews so far. The one that I've currently finished, the interview that I currently finished most recently was with Michael Marcus. I did highlight, I highlight all of everything that I read. I highlight what the most important things I've read so that it's a little easier to come back to it and kind of touch on whatever I felt most interesting for me. So if I can pick out something out of what I've read out of this chapter with Michael Marcus, I would pick out okay, so all right, so here's a quote. He says, in addition to not over trading, so he's pointing out that you don't want to be a trader who's over trading because most of the times the traders who over trade are not long-term successful or are not long-term profitable. And in addition to that, Marcus stresses the importance of committing to an exit point on every trade. So when you're hopping into the markets, you want to, or before you even hop into the markets, before you click buy, before you click sell, you want to set aside or analyze or even find an exit point on where it makes sense to get out of the markets. If you can't find a point like that, you can trail your stop loss and allow that to be, have a trailing stop loss just so that, every time the market keeps on making, let's say you're in a buy and the market keeps on making a higher low, a higher high, higher low, higher high, every time it makes a new higher high, you can easily put, a trailing stop loss below the highest low so that you can continue to profit in the markets and that can be your what is it? Your exit point. Like he said, your exit point. It could be when the market hits that stop loss of your trailing stop loss. If you don't, have a specific point, maybe price or a specific high or low already mapped out on or imbalance in the market already mapped out, then you can just allow the market to give you its own exit point by having a trailing stop loss. Um, or Oh, he says he feels that protective stops are very important because they force this commitment on the trader. So that kind of gives you um, extra information about the importance and the significance behind having a stop loss. It gives you a commitment that you're willing to come out of the market if price hits a certain point. Let's say, for example, if you have a trailing stop loss. So that's one of the important things that he's spoken about. A second thing he's spoken about that I think is important is it says trading is emotion, it is mass psychology, greed, and fear. It is all the same in every situation, no matter, and he's pretty much saying that no matter all across the board, doesn't matter what you're trading. Could be stocks, ETFs, commodities, indices, FX, futures, the whole thing, crypto, you have all of those that are significant fear, greed, your emotional swings and stuff like that. In order to mitigate the amount of emotions you're pouring into your trades, though, it's suggested that you have proper risk management so that you're accepting the risk and, winning a strategy that makes sense, proper risk management, stuff like that. Furthermore, I'll start to show you guys how this week looks. I'm not sure if on the last video I had posted if I had showed you guys my new watch list, but next what I'll do is I'll show you guys my watch list so that you guys have an idea of the things that I'm looking at on a weekly or daily basis. So here's my watch list. So in my watch list, you can see I've got NAS, I've got gold, I've got UK 100, USD CAD, CAD JPY, and then BTC USD. So I try to I try to be involved in almost every FX somehow. Like instead of like GBP USD, instead I've used UK 100 so that I'm involved or I'm participating in, what's happening in the UK or, that side of the world. I've also, I've participated in US dollars, so you can see crypto, some crypt in the mixture. You can see in this watch list, I have some crypto here, which is BTC USD, but I'm also involved in US dollar with gold, USD CAD. So, and if I'm trading a US dollar or USD pair. I'm not really looking to get into more than one USD pair because, if stuff hit the fan like it did last week where we got the US dollar from going at a, bullish to bearish, you don't want to get wicked out on two different pairs that are going against the US dollar because now instead of risking pretty much 5% on putting your bets on a 5%, putting 5% of your account's equity on a pair, right? If you're going with the US dollar and you're going for a sell with XAU USD, but you're also going for a sell with BTC USD, then technically you're actually going for 10% risk on the US dollar instead, right? You can see on USD pairs last week, we had a good amount of, changes. This was unexpected. I wasn't a BTC USD trade. That would have been a 1 to 13, but this did not happen. And I didn't risk 5%. I risked only like 1%. So I'm not upset with that. Uh, I'm gonna show you guys what I anticipate happening this week. You can see that we headed into a daily area of interest. Excuse me. I was anticipating that the market would have gone way further, and I felt like the weekly would have went from being bullish to bearish, but it seems like that's not gonna happen. We're probably gonna make a new high because the daily's already bullish. And if we mark out the daily structure, this is the high, or this is the higher low, and then this is the higher high. Now, if we look at the 4 hour actually switched from going from bullish to now bearish. So it started creating, lower highs and lower lows and lower highs and lower lows. So now it's interesting because the 1 hour has shifted, also the 2 hour has shifted from going bearish to bullish. Now, we've got since we've got the 4 hour to go from, being bullish to bearish, it's now gone from bearish to bullish. This was the most recent low. This was the most recent high. This was the most recent low. Then price breaks the structure. Now what we're anticipating is a pullback. So we might be able to get a pullback into 50% of this area. So this low to this high, and that's why I've got an alert around here. Because if we get, price to retrace around this 50%, then we can point out like a 15-minute, 30-minute, or even a 1 hour structure shift, and then maybe we can buy from there. As long as, price isn't extremely volatile, then we'd of course be open to targeting the most recent high and then might even hold um just depending on how price looks. So that's what I'm thinking about this week. And if I can't get a entry in around here on the price tracing up to this target point, instead of risking 7%, because this is a plus setup for me, I would personally put 7% in this move just because of how much um just because how highly probable this move um could actually be to happen. So I don't know if that makes sense. But because of how highly expected the outcome is in this case, I'd put 7%, which makes it, it's an A plus setup if it is one of my very highly profitable or highly probable strategies. Um, so yeah, since this is the most highly probable strategy, I'm personally interested in risking 7% instead of 5%. It's an A plus setup. My B plus setups, I risk about 5%, and then my C plus setups, I'm risking about 3%. I do have a D plus setup. My D plus setups, I'm only risking 1%. So that's pretty much my catalog on the different grades that I give in exchange, the exchange of values. So the values would be A plus B plus C plus D plus. The exchange of those, you have different grading risk to reward measurements of risk to reward. So I have an alert here. I'm not really looking to trade like how I was before, where I'm skimming through a whole bunch of different pairs. I'm really honestly not even sure if I want to keep CAD JPY here. I just want to participate in the Japanese dollar sometimes, but if we're looking at the way, I couldn't even hop into the market this most recent uh opportunity here, it makes me honestly want to start looking around. And also, I already had a Canadian dollar pair right here, and it was USD CAD. You see CAD Canadian dollar in this watch list already, so I really don't want to have too much of the same pair inside, because sometimes I just don't I lose track of the pairs that I'm already in. Like if I'm already in a USD CAD pair and then I see that CAD JPY has an opportunity, then that kind of defeats the purpose of what I told you guys about earlier in this video, which is trying to stick with one pair instead of being involved twice. Because if you're involved twice and the market goes against your bias, then on both of those, then now you're, instead of risking actually 5%, risking 10%. Or if it's an A plus trade, so-called A plus trade, like me, how I have 7% of risk on the table for my A plus trades, then, and I'm involved in two of the same pairs, USD CAD, CAD JPY, both have the Canadian dollar, and let's say I'm going against the Canadian dollar. Now I'm going against the Canadian dollar with 14% of risk on the table just to go against the Canadian dollar, when it still should be treated like the casino, where you're accepting the risk and you're thinking objectively, shouldn't have any emotions. But turns out, the more I risk over 7%, the more emotions I have involved, and that is I've pointed out my, I don't know, I guess you could say weaknesses, strengths and weaknesses in the markets. So yeah, I think it's good to, and I found out the hard way by journaling. So if you guys aren't journaling, I would highly recommend journaling. Um, and where do I journal? I'd use TradeZilla. I want to, I've been using Notion somewhat, like here and there too, to take like snapshots, but recently I haven't really been like on top of it as I should. There is ways to journal like screenshots and stuff like that, I think, in TradeZilla, but I just haven't learned yet. And I think that's something that I should be working on so that I'm not like in too many places. All right, so I want to check out a couple more JPY pairs to see if that trade could have been caught that we had last week. So I'm gonna add NZD JPY, AUD JPY. Um, Honestly, I even think that like I'm not even sure about Oanda anymore. Like I feel like Forex.com actually has better quality for finding trades because it turns out the candles that I was looking at last week on gold, if I had known that the market was actually doing what I figured it might do, it's hard to explain because the candles on Oanda is different from the candlesticks on my Trade Locker account, and it's also different than Forex.com's. So it turns out if I was to listen to Forex.com instead of Oanda last week, based on the structure of the candles, then I would have actually pulled out earlier on the gold trade and it would have been a winning trade instead of a losing trade. So now instead of using Oanda, I'm going to use Forex.com instead. And so these three are on Forex.com. USD, USD CAD. I'm going to have to switch this out for different brokerage. Here we go. All right. All right. So, all right. Now we've got that JPY. This is also on Oanda, and I just don't appreciate the fact that, Oanda did something shady last week, but it's all a part of their game. Yes. Just gotta get around it. Um, Uncheck that. I'll move it back up. BTC USD. Oanda or no? Coinbase. I think I'm fine with using Coinbase as the broker. NZDJPY, and you've got AUDJPY. So if we look at AUDJPY, I think the swings here are actually fair. I also don't even have an AUD pair here, so I might actually switch this out. I might switch this out for AUDJPY instead. Um, so yeah, I think that's actually instead of CAD JPY, I'm gonna switch CAD JPY out. Um, I just don't like how choppy this was right here. Like this right here was this June, so June all the way here. It was 16 days. Half a month for it to make a decision. So it's not bad. It was just very choppy. So hopefully it doesn't do that again, but can't control the markets, can't complain. Not a big problem. Instead of NZD, I'll use AUDJPY. So now we have two USD pairs. Well, two USD currencies. Gold is a commodity, but I still think it's a fair shot. So we got a crypto USD pair, BTC USD, which honestly has big spreads. So I might honestly not even be involved in Bitcoin. I really don't want to be involved. So I just deleted it. All right, so now we can officially agree that there's only two USD pairs. We've got gold USD, so XAU USD, USD CAD, so two USD pairs. We got NASDAQ, which is an indice, as well as UK 100. And is UK 100 an indice? We can check. Is UK 100 a indice? Index. Sorry, that's plural or singular. It's supposed to be singular. Index. Index fund. No, the UK 100 itself is not an index fund. It reverses to the FTSE 100 financial stock or time stock exchange. A market index compromising 100 large cap UK companies. Um, okay, so it's a stock market index that represents the 100. Okay, right. So then it represents the stock market. Um, Interesting. All right. So now that we've marked out, all right. Looks like it froze. Hold on. Okay. AUD JPY. So now that we've got AUD JPY, we can officially see that we're bearish. So we're under the EMA of the bearish. We're under the daily EMA. Now that we know that we're under the daily EMA, we can start checking things off. So as you can see, this was a low, this was a high. This break of structure here gave us a new low. And then this high right here gave us our most recent high. Then we've got our most recent low. Now that we've got our most recent low, what I personally would do is pull a fib retracement. Now that I've pulled my fib retracement, what I'll do is I'll go down to the lower time frame. And then, in fact, I would go down to the 4 hour. So instead of looking and seeing that our 4 hour time frame is um bullish, we actually see that we've got, a couple, like, let's take a look, right? If we were to take a look right here, we can see how many times price has respected this area. So we would probably say one, right? Two, three, maybe. We've got a couple different times. So in the past 1 to 2 years. So in the past 1 to 2 years, what, 23? Let's say 23 August. So August 2023. We can get all right. Boom. So yeah, one, two, a lot right here, honestly. Uh, Most recent right here. So this is a good area. This is a good point of interest or area of interest to start looking for sells. Not only is it time to start looking for sells, but the 4 hour even shifted here. Um, 4 hour shifted, right? If the 4 hour shifted and we're getting a retracement back into the 4 hour, then even probably the 1 hour, I would imagine. Yeah, 1 hour even shifted here. I would honestly say that it's safe to start selling in this area. And if we go to the 15 minute, right, you can see that for one, we got an imbalance. Not only do we have an imbalance, but um might actually put imbalance. I'll delete this one so that we can all find out, what we're referencing to. Oh, I should have actually, I want to put this in like put it in the middle. Perfect. Oh man, I need to save it. Um, all right. So I am thinking, because if I was to start selling hair, I would only risk 3% with this scenario. Um, I would do if we did 3%, then that would be a so 3%, that would give us a gain of almost 6 times 6, so 6, 12, 18, or 6, 12, 18. So 18%, risking 3%, right? I'm not exactly sure how this 15 minute would look, right? Hopefully the 15 minute structure shift would be giving us a better risk to reward, but it's honestly hard to tell. Really, honestly, it's hard to tell. So I might take the sell from here. It's 7 o'clock. Yeah, I'm gonna take the sell from here. I don't want to give it too much unless how does a 2 minute look? And there's no 2 minute imbalance either. I don't really like that. I don't like that there's no 2 minute imbalance. I'm not the 1 minute. And there's not even a 1 minute imbalance. But the 1 hour structure seems fair, and also the 4 hour structure seems fair. Really, honestly, though, all the structure right here seems fair, except for, low time frame. What I'll do is let me check the spread. The spread is honestly at a fair price too, so um let's see if me and Trade Locker, it looks like it agrees with the direction as well. Um and yeah, I mean, let's look at the 30 minutes. So honestly, risking three for 18% is a good. It's good. I can't complain. 8 o'clock is right around the corner. Like I'm just gonna do. I'll put 3% risk on the table. Is this a 3%? You see how price is actually still shooting? I don't know. This is iffy. See, price is just shooting. You know what? I'll put an alert right here because it's also Sunday. I'll put an alert here. And if I was actually to enter right here, then this is a 1 to 6, almost 1 to 7. This would be 1 to 7. So 7, 14, 21. So for 21%, if you risk 3%, this might actually be an A plus trade, but I might have to do it. A plus trades, I risk 7% though, so that's actually all right. Here we go. I'm doing 7% risk on this trade. So now that I've risked 7%, this is a 7 for 7, 14, 21, 28, 35. That's 35, 42, 49. So risking 7 for 49%. So I'm gonna keep this alert set right there. And then just in case if price pushes up here, I'm gonna keep an eye out. That's what I'll do. I'll keep an eye out. And notice how there's a breaker. You There's a breaker right here. Price already mitigated into that breaker. And then that's when the price has shifted from bullish to bearish. So this is a good sign that we're off to a good start for the week, but really don't actually know what's gonna happen. So um, well, you guys see me taking a trade live. Um, excuse me. 6.98% risk on this. for a profit of, let me go to potential profit is $232, which is 43% increase on this account's equity. Currently, account's equity is around $530. So we'll see what happens there. I mean, this is really a plus plus trade because not only is the daily structure in sync. I mean, we can check the weekly, but I don't know. Weekly seems to be weekly seems to be if we think about it realistically, we're bearish on it, right? So we're bearish on the weekly, and dailies also switched from bullish to bearish. And then the 4 hour switched right from bullish to bearish. Then we've got the 1 hour, maybe even 2 hour, right? 2 hour switch from bullish to bearish. And then not only that, we've got the 1 hour switch from bullish to bearish. The only thing we don't have as bullish to bearish is actually we do have the 30 minute and 15 minute from bullish to bearish. So they're already bearish. They're all literally bearish. So I'm gonna call this one out in the Discord, and let's see, 1 hour time frame, maybe 4 hour. I'm gonna screenshot this on the 4 hour time frame. I took a screenshot. I'm gonna post it in the Discord, and I'll put I'm shorting AUD JPY, stop loss 95 598. So 598 TP, take profit is at 94 400. So now that we've done that, um, hmm, again, just in case I've got this alert here. Hopefully it isn't pushed that far. My gosh. Because there is some imbalance even higher, but hopefully we don't need to go that high. And what I could have honestly done was wait until 2 minutes shifted from bullish to bearish, but sometimes, honestly, sometimes price just spikes down to TP. And that's what I'd hate. I'd hate to be out of the market when I have the strongest feeling that the market's going to push into my direction. And then, I waited all this time to be out of the trade. So I'd rather be in the trade at the point where I feel like the market's going to turn around rather than miss the trade while I'm staring directly at where I feel like the market's going to turn around, if that makes sense. So yeah, there is a possibility that these, you know, highs right here might get taken out, but I'd rather sit in the trade while it cooks. And yeah, USD CAD. So that's my markup on AUDJPY, and I'm actively in there. Uh, yeah, so active. Not in as USD CAD. So USD CAD, we've got the daily time frame, which looks bullish, right? We do have some bullish momentum. for the USD CAD. Now, what's strange about the US dollar is you look at the DXY, it is bullish. But maybe we're getting the pullback. Maybe we're getting the pullback. Honestly, XAUSD this week, it just doesn't seem tradable for my personal strategy. If I were to trade gold, here's what I do. I hate to switch back, so I'll just save that for after. All right, let's go back to USD CAD. Let's look at the weekly, and on the weekly time frame indicates that we're bearish. If the weekly time frame indicates that we're bearish, then and we end up actually, are we truly bearish? This actually gives me a question because mm, because we could be bullish. I'm gonna say USD CAD or bullish on the weekly. Now, if we're because the reason why I say that is because it seems like this is the low and this is the high of the weekly overall. So if this is the weekly's low and this is the weekly's high, then that tells us that the weekly's actually bullish, which means the US dollar could be bullish. And if you look at the DXY, the DXY is bullish right now. So what I would say is if we start looking at now, instead of having this right here, I'm gonna delete this. I'm gonna use the line, and I'm gonna put weekly low, and then I'm gonna put weekly high. Perfect. So that we got a better idea of direction. Now that we got a better idea of the direction, I would put low of, hmm. Let's see, we got low, low, high, low, high, low, high. Delete. Daily low is here. Double click that, change it to the daily's low, and then I would put the daily's high around here. Now that we got the daily high, I mean, we're already at the 50%. Now all we have to look for is possibly 4 hour. You don't have to pay attention to the 4 hour. But, price wants to retrace, it's gonna retrace. Now that we got to retrace, I would I would say we should start looking at the 1 hour. Um 4 hour, yes, the 4 hour has shifted from being this is actually interesting. So 4 hour is also in sync with the daily. So the reason I'm saying that is because actually 4 hour has shifted from being bullish to bearish. So the 4 hour is actually hope I'm not confusing you guys, but this is the 4 hours range. You can see that the 4 hour is shifted from bullish to bearish. What what I want is for this week is I want the 1 hour to go from bearish to bullish on the 1 hour time frame. Because if that happens, then that could give us an entry for, a buy on USD CAD. And well, if we can't really find a reason for price to go to a specific point on the 4 hour or maybe even the 1 hour, based on the imbalances in the market, we can just hop to the areas of interest on the daily time frame, which are, I would argue that the areas of interest on the daily time frame could be hair. And I mean, it's already touched there, so uh, maybe this might be the next area of interest on the daily time frame. And we're definitely gonna add an alert. Not only will we add an alert, but we'll just do a daily area of interest on the box. So I'll put this as green, meaning we're awaiting entry. So UK 100, we're gonna look at obviously the weekly's bullish. If the daily's this bullish, the weekly's for sure gonna be that bullish. Just off of price action. Daily areas of interest. So, or let's just start with daily levels of highs and lows. So this is clearly gonna be, you know, uh, man. So high, low, high, low, high, low, high. Now that we can see that these are the highs and lows, we can get our retracement tool and perfect. So there's a clean imbalance in there too. Hopefully, cross my fingers. Hopefully the 4 hour is also bullish. Um, with the same lows and highs. Unfortunately, it's not. It's unfortunately not. All right. Well, I see that there's no wick here, so it just gives me a signal that price is going to push down to that price point. And at this point, I'd really just be looking at setting a daily low, right? So daily low. And then I'm just gonna put 4 hour daily high. If I put 4 hour and daily high here, that could indicate that the 15-minute time frame could find a some type of support in this area, maybe even right here. So if the 4 hour time frame closes, then this would be the range of the 4 hour. I mean, honestly, this already is the range of the 4 hour, so I'm gonna look at the imbalances on the lower time frame and maybe even 15-minute. Perfect. I'm gonna say if price pushes down to this point, I really want to say at this point because there's not even a wait here. Plus, it gives a better risk to reward. So yeah, I want an alert once price reaches here, if it does. And if it does, I'm gonna start looking for entries to target this high. That's my bias. Um, different key levels. I believe this is the 4 hour, 4 hour low. It could very well be the 1 hour low as well, but check. Let's so yeah, that's actually interesting. So this is a 1 hour and 4 hour low. I'm gonna do a 1 hour, 4 hour low. This could actually be taken out. This is a Friday's low. So low of Friday. 5 minute shows any imbalance. Some imbalance right here. Uh, boom. Let's get a So I've actually taken away that area of interest right here. I could probably, yeah, I'm gonna do a alert right there. Different alerts. Look at the 5 minute. There is no like imbalance, like significant imbalance here. Honestly, price maybe here, but not. And maybe here. What is this? Thursday's low. I think Friday's low should be taken out, so I'm gonna delete this one. Here we go. So boom, something like that. This was Thursday, last Thursday's 1 hour low. Also last Thursday's 4 hour low. So that's the sync of different time frames. But yeah. There's obviously a chance that this could get broken. This is Thursday's low. It could be broken, but I highly doubt it with with the type of momentum that we're seeing right now. Highly doubt it, but it's definitely possible. This is a 4 hour high because this candle was broke above the highs. Um, Here, these are the levels: high, low, high for the 4 hour. So that is it's my prediction. Yeah, so I'm not that interested in gold. Let's check on AUD. AUD JPY is like it honestly wants to break the Friday high for some reason. And it's already did its 1 hour shift, which is the crazy part. 4 hour time frame is already shifted. 2 minute time frame, still bullish. If I were to enter here, this would have been a 1 to 12. Time is it? 7:27, almost 7:30. I really want to see how this plays out. Um, it just seems like a lot of consolidation here, honestly. Heck of a lot of consolidation. But I mean, if we want to, we want to mimic the 4 hour and 1 hour time frame, then this will be 4 hour high, low, high. What about the 1 hour? Well, this would be 1 hour's 1 hour low and 1 hour high. 5 minute breaker or 1 hour breaker at this level. I want price to go to around this point. and I would target new high. But this is going against the US dollar. Like USD is it is dropping right now for based on the US dollar or USD CAD. So we're just gonna have to see which one makes the most sense. 4 hour honestly took a tank. So we'll put a alert here. With the 15-minute time frame could shift. You can probably target air or this low. Because the 1 hour is most likely if it's gonna be the daily, to go bullish, 1 hour has to come down here or maybe even lower. There's some imbalance here. Here too, but I'll just mark it out. Perfect. All right, so that is all of my expectations. Expectations. What does a 1 minute look like? Gosh. Price rejects badly off of this area. Like 95, 600, like price reacts badly. When I say badly, I mean like price wicks and just opposite direction almost. Seems like almost every time, but man, we'll see what happens. This is actually gonna be interesting. All right, so that is pretty much that. I want to show you guys TradeZilla. Net P&L down 65%. Disappointing. I know. Um, you can see I went a whole week red, almost an entire week red last week. And then we've got this week. This is a new brokerage account, so I've connected a new brokerage account, which is why if we look back at, previous months, you don't obviously see any trades at all. So I'm just looking for what's working with different brokerages. Seems like the brokerage I use now is Sage FX, so seems to be better than what I was using before. I did experience slippage for like a heavy load of slippage the first time with Sage FX, which was very unexpected. Um, but yeah. Um, I mean, I have experienced slippage before, but I guess I never questioned it. This time I did. And I think questioning things throughout this journey of being profitable is one of the biggest, one of the most important things um, in this experience. So, yeah, I hope you guys enjoyed this video. Like, comment, subscribe. and let me know what you guys think about those quotes that I gave you guys earlier. And good luck on your training this week. And thank you guys for watching. Join the Discord.